You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
The way it's playing out now is very bullish also in the sector because the mining stocks now are showing strong relative strength to the gold price. The miners are consolidating higher. The gold price ran up to that 2075 and the miners are consolidating around the area they were trading at when it went up there. So we had a huge move, move downwards in the gold price after it ran up there so quickly, but the miners pretty much yawned at it and they're consolidating higher. And they're telling us that, hey, the gold sector is about ready to take off here.
Welcome back to Mining Stock Education. I'm your host, Bill Powers, speaking today with my friend David Erfle over at Junior Miner Junkie with a Y.com. David's a professional resource investor, also has one of the best newsletters in the sector. Very long every weekend when I sit through it on Saturday morning after he sends it out on Friday night. It takes a while to go through it because it's so thorough. He covers the companies that he invests in, the news releases, provides a little commentary, as well as what's going on at a geopolitical, economic level, as well as what's going on at the macro level within the mining sector. So if you are new to the sector and want to learn more, go check out David's website and you can find more there. He also has a free email list that you can get on and he'll send you his weekly editorial as well. So David, and now that I'm done selling your newsletter for you, welcome onto the show. Gold and silver. Well, what do you see happening here? We're about $1,900 with gold, $200 off the all-time high. Is $2,100? Is that kind of the psychological key for gold that we're really going to see generalists flood into the sector and perhaps see M&A pick up?
Yeah, it could be. And thanks again for having me on. Always nice talking to you every month. Always great comments from your listeners and watchers. And I really appreciate it. But yeah, it looks like, 2,100 is a magic level now because if we take a look, if we zoom out to the big picture in this secular gold bull market that began at the turn of the century, we had a huge move from 250 to about 1920 in a little over a decade. And then the gold price had a sharp 50% correction in 4 years after that. It's basically kind of what happened during the first secular bull market when Nixon took us off the gold standard. The gold price shot up to $200 and then it had a 50% correction down to $100. And then it went to $850 just a few years later. But this one is very bullish, the technical situation here, because it's created something called a cup and handle pattern. And in technical analysis, that's one of the most bullish patterns, consolidation patterns to see take place in a commodity. And as far as the gold price is concerned, it's almost 12 years this one's taken place. We've got a cup from the 1920 high in 2011 to the 2089 high in 2020. And now the handle has taken a couple of years to play out here. And once we have a monthly close above that 2,100 level, that pattern will be technically complete. And then the target price from the cup and handle pattern is about $3,000. So, and that could take place pretty quickly, like maybe by next year. So, and the way it's playing out now is very bullish also in the sector because the mining stocks now are showing strong relative strength to the gold price. We saw the gold price have that run up based on, the Russia going into Ukraine. It ran up to 2075 really quickly. We basically had a $300 move in 6 weeks. And the last thing that I would want to see would be a parabolic move where the gold price just keeps going higher. Then you'd have nasty corrections and it would get really ugly. Well, this one is played out rather nicely as far as the consolidation is concerned. It's consolidating about in the middle of that range, which is about 1900 to 1950. And basically what it's doing, it's kind of creating another cup and handle inside the handle of the 12-year cup and handle. So, I wouldn't be surprised to see the gold price, consolidate a little while longer here, but getting back to the gold shares, the miners are consolidating higher. The gold price ran up to that 2075 and the miners are consolidating around the area they were trading at when it went up there. So we had a huge move, move downwards in the gold price after it ran up there so quickly. But the miners pretty much yawned at it, and they're consolidating higher. They're telling us that, hey, that the gold sector is about ready to take off here.
Dave, out of World War II, we had the Bretton Woods Agreement, and there was a monumental economic worldwide monetary shift. It seems to me that we may be experiencing something like that currently, where it's been well talked about in the last week in the financial community. Putin is saying, no, pay me in my own currency for my oil. And people are talking about gold for commodities, not the US dollar. How are you playing this? Like in your own portfolio, in your cash positions, can you share some of your expectations beyond just the gold stocks? What are you doing to preserve your family's wealth?
Yeah, well, sure. It's, as far as the juniors are concerned, as you know, I have a junior portfolio that I share with my subscribers. They kind of look over my shoulder and see and teach them how to invest in the sector successfully. So I have savings in a SEP IRA account that is not associated with juniors, since I have so much writing on the junior sector. For the past few years, I've been in just a select few very liquid ETFs. One of them is the DBA, which is the agriculture ETF. It's done extremely well, and I expect it to continue to do extremely well, especially with that Russia-Ukraine area being the bread basket of the world. 30% of the wheat comes out of that area. We're already seeing food shortages in other parts of the world, and unfortunately, it's probably going to get worse. So DBA is one. DBC is the other one. That's the commodity ETF. And XLE is that oil ETF, but the oil price has gone up pretty fast. So I expect that to consolidate a while here too, maybe. But those are three that I've been in over the past few years and have done quite well.
And then what about holding a cash position? What is your thoughts during this turbulent time of holding too much? Is there too much cash you can hold right now?
I don't think so. That's a great question. I've got a certain amount of cash, put aside that's in dollars, that only me and my family know where it is to have access to it, because, you never know what's going to happen with cyber attacks or the system going down, or, because nobody uses cash these days. Everything's electronic and they're trying to go that way. But, when the system gets shut down, that's not going to help you much. Your Bitcoin's not going to help you much. You're going to your ATM to get cash out. That's not going to happen. So I like to keep 2 months living expenses in the house, and also junk silver. Just in case you have that Mad Max scenario, which I am not predicting. I'm not saying it's going to happen, but you want to be prepared for it. And junk silver is the best thing to have in that scenario. And junk silver meaning U.S. Silver, U.S. coin, U.S. Quarters, dimes, half dollars, minted before 1965, and that's also the cheapest silver you can buy in your coin shop as well. So, having physical gold is all nice and good, but when you want to, if in that situation that I was talking about, if it gets really bad and you have to buy small things, you don't want to use a gold Krugerrand to do it. So I do have physical gold as well, but physical silver I have more of.
So Dave, like you said, you focus on the newsletter, you focus on the junior mining sector. So thank you for sharing a little of your thoughts outside of that. But moving back into the realm of your expertise, if you're looking to deploy money in the junior mining sector, would you be more prone or likely to add to an existing position or initiate a new position right now in today's market?
Well, I could just tell you what I'm doing right now. This week I'm selling a private placement where the shares came off, and I still have exposure to the stock via warrants. So I'm going to sell the private placement position, and I'm going to use that cash to add to existing positions. As you know, since October, I've been focusing on accumulating positions in developer explorers that are de-risking really large projects, safe jurisdictions that have serially successful management teams that can raise money in the capital markets, that have access to capital. And they've also, raised at the right times. They're mindful of dilution. There are a handful of these stocks out there that are still very, very cheap. When you take a look at the gold price that looks like it's about to explode out of that cup and handle pattern I told you about, a lot of these juniors are still yawning at that. We've had the major miners have a nice move up, and I was talking about it several months ago. I said, keep an eye on Barrick and Newmont. Those are the bellwethers, and indeed, those were starting to move first. And then it went down the food chain a little more, where you had the royalty stocks move. The Franco-Nevadas, your Royal Golds, they move fast. So these companies have had really nice moves, and they're consolidating their huge moves higher. Yet a lot of these juniors, the generalist investors are definitely not interested in right now, and even sector professionals are just starting to move into these juniors. So that's where the value is right now in these juniors. And so I've been doing that. Recently, my subscribers and I were rewarded by a takeover. On the one hand, it was a good thing because it was a nice premium, and we all did well with it. But on the other hand, you say to yourself, "Wow, I bought this as a 5 to 7 bagger opportunity, and the company just they saw an opportunity and they sold out of it." And on the one hand, it was nice that we had the move higher and we did well, but on the other hand, you see the missed opportunity, and hopefully it would go higher once the sector breaks out. But on yet another hand, it afforded me, and I'm sure some of my subscribers, to take the profit and take the investment capital and put it into another junior that I feel has 5 to 7 times potential, and that's what I did.
Dave, you and I haven't spoken since last month, so I'd like to get your thoughts on a meme stock, AMC, financing Hycroft Mining with Eric Sprott. Like, who would have predicted that? What is your commentary here?
Yeah, that's a situation that it looks so tempting. They've got multi-million ounces in the number one jurisdiction on the planet, but lots of debt, lots of lots of red flags. But kudos to the people who saw it and went into something like that. As a newsletter writer who is, basically my take is I'm a conservative investor in a very high risk sector. So I look at something like that, and I see the potential, but I'm like, I can't, in all honesty, I can't recommend this stock because there's so much danger. Because debt is the worst 4-letter word to me. So as you know, that the stocks that I recommend, that I invest in, they have no debt. But like I said, kudos to the people who saw that opportunity, and best of luck with them. I mean, it's gone up. It went from 35 cents to over $2, I think $2.50, something like that. Now it's come back down to $1.25 or something. So it's kind of all over the place. But it was a nice win for somebody who took a chance down there in the 30 cent level.
Do you think that the attention that this meme stock will bring on the gold stocks could be positive for the sector too, in terms of liquidity from retail investors?
Sure, it could be. It made all the the major headlines, and when you see, like I've said so many times in the past, we need to get the generalist investor back into this sector. I mean, they've pretty much been gone since 2009. From 2009 to 2011. That's when they came back into the sector. And they left in droves when the GDXJ went down, I think 85% from 2012 to 2015, and they're not back yet. They're not even close to being back, because if you take a look at these juniors, there's so much value there, and there's so much room for just a little bit of that money to come in will move these things a lot higher. But yes, it's good. It's good for the sector, a headline like that. And we also need to get mergers and acquisitions heating up again. That would, and a major discovery, of course, that always helps. We get a major discovery, that will bring, something, like the late 90s had with Voisey's Bay, and then what turned out to be a big, huge con in Briex. But those two discoveries brought in generalist capital in droves, and we haven't seen that kind of involvement from the generalist investor ever since.
Now, Great Bear, to their credit, they took it to what was it, 1.9 or 1.8 billion, whatever they were bought out for. Do you think that money is going to be redeployed back into the sector?
Absolutely. Yeah. I mean, and a company that I recently invested in and that I recommended to my subscribers, a fund that made quite a bit of money on that stock. They own, I think, 10% of it. They've invested in this company that I just recommended and I just purchased in my newsletter. So they're doing the same thing. They're basically saying, "Hey, thank you very much for this huge windfall. I'm gonna take my profits and I'm gonna put my investment capital into something else that I think is going to do the same."
Within the sector, they're staying
exactly.
Sector, right. Pure Gold Mining. So they're having difficulty getting their mine up and running, as have so many developers or mine starters. For the sake of learning, Dave, could you give your commentary on Pure Gold Mining, their recent announcement they need more money?
Absolutely. I think we talked about the importance of management teams the last time we talked, last time we spoke. That's, we were always, me and others, other newsletter writers and analysts, what have you, they're always talking about how the importance of management is the number one factor, because a great management team can take an average project and make you a lot of money, where a bad management team can take a great project and lose you a lot of money. Pure Gold Mining is part of the Oxygen Capital Group. Mark O'Day has created 10 companies, sold a handful of them for large premiums in the past. It's a great team. It's a great idea. And but Pure Gold, they've had a lot of problems. They've got a lot of head grade issues. This is a mine that is in one of the highest grade mining camps in the world, the Erfle district. It's a district that birthed, one of the greatest gold companies in the world in Goldcorp. And so, a lot of people invested in this stock because of that. You have the highest grade camp in the world, one of the highest grade camps in the world, serially successful management team, but on the other hand, they do tend to bloat their share structures. And Pure Gold was starting to do that. I invested in Pure Gold early on and did quite well with it back in 2016 to 2017, right around there. But I've been just watching it ever since. They changed management teams recently. They've got major companies in it, funding it and having access to capital with it. But they just announced today that they're probably going to need another 50 million. So they're going to have to raise money, and the share price, has dived down to a 40-cent level now, and they've already got nearly 1 billion shares out. So. This has now become a distressed company, a company that took over a brownfields project in the Madsen mine and came upon a lot of issues that they weren't expecting. So, it's just a lesson to subscribers to not just say, "Hey, this company's got a great management team, I'm going to invest in it." You have to check all the other boxes as well. The capital structure, the project. Where it's at, all these things you have to take your, do your deep dive research into these companies, even though they have a great management team. I've learned this lesson in the past myself. I've lost a lot of money in companies where I said, these guys have done it before. They personally made me a lot of money, so I know what they're doing. So it's not that I got lax in my research. I just overlooked a few things and just said, well, these guys know what they're doing, and I have faith in them. You can't do that. And it was a great lesson for me, and I've gotten my money's worth out of that lesson.
With narrow vein mines, are you more cautious too versus an open pit mine that's just about moving the earth?
Yes, underground narrow vein mines. Yes, absolutely. I've made a lot of money in one company that got that right. That was Klondike Gold. But other narrow vein mines, it's very difficult to mine narrow vein underground mines successfully. You really have to control your head grade. You really have to have really good head grade management.
Dave, you've been calling for stagflation for years since I've been talking to you. Are you more confident than ever that we're going to see that? Especially mortgage rates are up 1% in a week. I think they're at 5% on the 30-year. The data is not looking good, is it?
Not something I'm happy that I predicted. That's for sure. Yeah, I mean, the last time we had stagflation in this country, I remember it well. Going through my father's change, trying to find, silver dimes and quarters, and which I still have, by the way. But at the time, our debt at that time, we had the stagflation in the 70s. Our debt was less than $1 trillion. Our debt to GDP was something like 30, 34, 5%, something like that. So, they were able to come in and, Paul Volcker was able to come in and raise rates, to 20, from like 4.5% to 20%. They were able to do that. Now, we've got 30 trillion in debt. Our personal, debt to GDP is 130%. Global debt to GDP is quite a lot higher than that. Global debt is now over 300 trillion. And a lot of this emerging market debt is in dollars. So, we're in a really bad financial situation here. And with the U.S. and other Western nations taking Russia off the international SWIFT system, this is threatening the petrodollar now, because the finance minister of Russia basically came out and said, hey, we'll take hard dollars for our oil and gas. Hard dollars is gold. And in the same speech, he said, U.S. dollars now are basically candy wrappers to us, because the U.S. and the Western countries have collapsed our ruble, down to where it's worth less than a penny. So this is a financial war going on right now, which hopefully will not lead to World War III. But it's a very serious financial situation that we're in right now, and digital bitcoins aren't going to do you very well. If something happens with the system, they're rapidly doing these, putting 5G all over the place, not for your benefit, it's for their benefit, so they can go to electronic currency. It's the gold price is sniffing all this out, Bill. It's sniffing all this out. So, I'm happy to see the gold price go higher, but for the reasons why it's going higher, I'm not happy about it.
Mm-hmm. And that's what so many people have warned. They said, you want $5,000 gold, but we guarantee you don't want the world in which you'll see $5,000 gold.
Exactly. What's the world going to look like when gold's $5,000 an ounce? I mean, and I would not be surprised to see it at $5,000 an ounce if we continue to have this monetary system within the next couple of years.
Yep. Well, David, your website is JuniorMinerJunkie.com. I think I've already told people enough what they could find there, but really appreciate your monthly check-in. Thank you for sharing your insights on today's show.
Always a pleasure, and thanks very much for your support and your continued support of your listeners.